You've probably heard that a lot of people don't need a financial advisor, and I'll be honest with you, in some cases that actually is true, and that's coming from a CFP. So in this video, I'm going to give away the kind of financial guidance most advisors usually charge for. Not a sales pitch, just trying to give you practical advice. But I'm also going to walk you through what are the circumstances when a person really doesn't need to necessarily hire a financial advisor, but also show you situations where having an advisor, especially someone who is a CFP, can radically improve your income. So stick around, there may be an aha moment waiting for you. So let's start with a little bit of truth about what most advisors won't say out loud. If your financial life is relatively simple, you're disciplined, you probably don't need to pay someone to tell you what to do with your money. And here's what I mean. So if you pay off high interest debt or have none, if you've built an emergency fund, if you're maxing out your 401k or Roth IRA or other retirement accounts, if you're avoiding trying to time the market and you're investing in well-diversified, appropriate funds for the most part, then congratulations. You're already doing about 80% of what truly matters. And today's tools make that even easier than it was in the past. There's free budgeting apps. There's different kinds of software packages that can automatically either invest or rebalance your money with just a few clicks. So yes, it's entirely possible to manage your own finances, and lots of people are doing that. If you're in your 20s or your 30s with minimal assets and a long time horizon, you may not see immediate ROI in paying a fee to somebody who's an advisor. So the question is, most people would ask, then why would I work with an advisor? And here's where things get a little bit interesting. While DIY can work for many, it also has its severe limitations. You know what they say, a master of everything is a master of none. Most free advice is general, it's not tailored. And the reality is life gets complicated. That's when small mistakes can have massive consequences, and not just in the immediate term, but potentially in years or even generations to come. Number one example I'd give is when it comes to tax planning. Most people don't realize that when and where you pull money from matters just as much as how much you saved and how much you invested. For example, some questions might be, do you take money from a Roth or traditional IRA first? Should you do a Roth conversion this year? If you make certain decisions during the year, how will that impact possible tax consequences next year or Roth conversions next year? What about tax gain harvesting in your brokerage account? Notice I didn't say tax loss harvesting. Lots of robo-advisors and other groups talk about tax loss harvesting, but what about tax gain harvesting? These are just some questions where having an advisor can help you save tens or even hundreds of thousands of dollars over the course of your lifetime, and it can have a major impact. Another area where advisors add a lot of value is when it comes to behavior and emotions. For example, right now it's 2025. For the first half of the year, we saw a lot of volatility over tariffs. At one point, the NASDAQ and the S&P 500 both reached beyond correction territories, but also reached into recession territory. So markets drop. Headlines scream recession, and your gut is telling you sell everything. One of the advisor's real jobs isn't just managing money, it's managing behavior. And when you look at studies from either Vanguard or Morningstar and others, they both show that behavioral coaching alone can add up to significant differences in long-term returns just by having somebody who's a professional, who's used to the markets, who understands the cycles they go through, and who understands fundamental versus technical analysis. They can keep you from really self-sabotage. If you look at the chart here, it'll show that most people time the market incorrectly, and most of that is driven because they are making decisions based on fear or greed. Very often they are not looking at the underlying fundamentals, and that's where having an advisor can make a huge difference. They understand the markets, they understand the cycles, they understand how to interpret data, and they are there to help people check their emotions at the door and make sound financial decisions based on what's best for them, not just the way that they're feeling at the time. Third example we give is life complexity. What if you're selling a business? What if you're inheriting assets or property? What if you're caring for aging parents? What if you're starting a second career? What if one of the spouses dies unexpectedly or is no longer working and now you have only a single income? Most online calculators can't walk you through all the different what ifs of real life, but a good advisor can simulate dozens of scenarios, if not hundreds of scenarios. Not to mention they run Monte Carlo analysis and many others through the software that they use, and helps you see not just what's probable, but what's possible. That ultimately doesn't necessarily secure what's going to happen in the future. None of us can securely know what's going to happen. Only God knows what's going to happen in the future. But it can give us a range of possibilities so that people feel confident in the decisions they make today are going to have the impacts on tomorrow that they want. Fourth example is when it comes to estate and legacy planning. wills, trusts, beneficiary designations, powers of attorney. It's not about how much money you have. It's about making sure what you do have is protected and goes where it should and how it should. Now, I'm not giving legal advice. I'm not an attorney. Most people forget that poor planning here doesn't just cost money. It causes family conflict, which can lead to irreparable damage. So here's the moment of truth. Do you probably need an advisor if your finances are simple and you're confident you're doing yourself? Maybe not. Would it hurt to have a professional's opinion? Of course not. But if any of these things describe you, it might be worth talking to somebody, whether it be us or somebody else that you already know. So here's one example. You have multiple different account types: taxable brokerage, Roth IRA, 401k, HSA, maybe even a trust or a jointly owned rights to survivorship account. Number two, you're close to retirement and want to coordinate Social Security, Medicare, tax-efficient withdrawals, multiple income sources. Number three, you own a business, you have stock options, or you get variable income, or you have employees that you want to make sure are taken care of and who don't leave. Or you're considering succession, either it be selling to an outside party or having an ESOP and passing it to employees, or maybe handing it off to the next generation. You want to receive some value from it, but you also don't want to strap them with loads of debt. Fourth example is you've had or will have a major life event, such as divorce, unfortunately, or a windfall, or a move, or inheritance, or a job change, or someone you were close to passes away, and either you're receiving an inheritance or some other situation relating to that. A fifth would be you just want someone to stress test your plan or call you out when your emotions start running the show and you're not thinking about things in an unbiased fashion anymore. Here's the thing. Most people think of advisors as investment pickers, but a real advisor is more like your personal CFO. They help you connect the dots between taxes, retirement, estate, risk management, charitable giving, and they turn them into a coordinated, cohesive plan. And I'll cite again Vanguard's research. It says that advisors who deliver comprehensive planning and behavioral coaching typically add around 3% per year in value. Not every year, not guaranteed. Obviously, that can't be guaranteed. And obviously, these are averages and these are projections based on Vanguard's research. But over time, that's a significant difference. Morningstar found similar results when it came to tax planning, rebalancing, and behavioral advice when they're bundled together. Here's another stat. Clients who work with planners tend to feel more confident. They tend to take less investment risk, and I would say they would stop taking risk that's unnecessary. There's your risk tolerance, but also it's important to know how much risk you need to take. But also the report shows that they have greater peace of mind regardless of their net worth. And in my own practice, I've seen the difference it makes when people know they're not going at it alone. I've seen what it means when they come in and they don't have confidence in their plan to start with, but then after working through different simulations, we're running a lot of different scenarios, they leave feeling much more confident that things are going to be okay. And that, I think, really cannot have a price tag put on it. So I'll tell you a little bit about our approach. It's not the way everyone goes about it, but it's just a way that we go about things and we find that it gives a lot of value. I like to give away a ton of information for free. Why would I do that? Because I believe if you can do DIY it yourself and you're confident, you should. You're really not the target person I'm trying to work with here. But if you find yourself in that other scenario, in the other 20% or so, where your life's complex, there's real dollars at stake, there's big decisions coming up, you don't feel confident in the decisions that you need to make, I want to be ultimately the person who helps you make them well. Being a CFP, we specialize in helping people just like you, bring clarity to complexity and make smarter decisions with their money and feel confident in whatever it is that they're deciding to do that's best for them. And at the end of the day, if we can't add real value, I'll be the first one to tell you that. I mean, as a CFP, as a fiduciary, our job is to do what's best in the client's interest always above everyone else's. If we can't add value above and beyond however we're being compensated, then there's no point in us working together. And you're going to be the first ones to hear it from me. So if any of this resonated and you're wondering whether a financial advisor can make a meaningful difference for you, let's talk. There's going to be a link in the description below. We can schedule some time to talk 15 to 30 minutes. You'll walk away with one of two things: either a clear plan to do it yourself or a clear sense that working with someone is worth far more than it costs. Either way, you win. Either way, you walk away feeling confident in whatever it is you're doing. So thanks for watching. If you found this helpful, please like, subscribe, and share it with someone who needs to hear it. And remember, your financial decisions don't just shape your net worth. They shape your future and also your family's future. So make the right ones, make the wise ones, and make them count. Thanks so much. Have a blessed day.